This conference will now be recorded.
Hey guys, good afternoon. My name is Carlos Garcia. I'm the founder and CEO of G.A.R Capital. You may remember me from our morning note here on YouTube. So I just want to take the time today to explain and to announce that we will be doing our futures trading signals. It's something that people have been asking for a while. We have been trading futures now for years, but we never decided to make it a signal service since we were getting just basically focusing on options for the most part. But now that futures trading has actually helped individuals trade the market as well as options, and now with new products coming out from the CME, this is the Chicago Mercantile Exchange, bringing down the margin requirements, making it easier for individuals to trade futures. We decided that we want to go ahead and create this since we do trade it ourselves for you guys. Basically, the same kind of rules apply. We go ahead and place our alerts on Discord. We tell you the entrance and exit points, and we put up a couple of charts explaining. The only difference is that this actually needs margin. You need margin in your account to do so. I'm going to go over a couple of numbers. I'm going to go over the disclaimers. I'm going to go over the risks involved and exactly what to expect if you decide to sign up for our signal service. So the basic thing I want to talk about, the biggest disclaimer, guys, is that this is not for beginners. This is definitely for more experienced and sophisticated traders. This is higher risk. This is definitely you need a higher risk tolerance. You need a lot more capital to trade these futures indices, especially with volatility. So understand that going forward, that you are entering an arena that's completely different than what you're probably used to with options and or anything else. If you don't have the time to look at the monitor or to trade or to keep up, that is completely fine, but this is probably not for you. Now, you could probably imagine a company saying, oh, don't join our service. Well, I want to make sure that you guys understand what you're getting into before you sign up for anything. So this is why I created this video, and this will be on our website and our YouTube channel to explain the basics of futures trading. It's not much to it once you understand it. So there's a couple of differences between options trading, the way we do it, we've been doing it for years, and futures trading. And futures trading is something we've been doing for years now. Me and Anthony have been doing it a while now. Kevin trades as well. And it's just something for us that we enjoy doing because it gets us, I hate to say this, quicker profits. Also helps us understand that, there's other ways to make money in the market after hours. So if you're an individual that is looking for more of adding a level to your portfolio and a little more risk to your portfolio in order to make a little more money, then probably futures trading is for you. If you understand risk management, if you understand what you're getting into, if you're understanding markets, then this is probably for you. Now, another big thing to talk about here, one big benefit in regards to futures is that there is no PDT, which is pattern day trading rule. You can day trade futures to your heart's delight. Keep in mind. Also, one other thing, Robinhood, as part of this recording on August 30th, 2020, does not have futures trading. So if you have a Robinhood account, you will not be able to trade futures. You will need to be approved to trade futures on any other broker, which is Charles Schwab, E-Trade, Fidelity, TD Ameritrade, what you're seeing in front of your screen. As an example, I'm going to go over a couple things here, but you need to be approved for options trading. So let's go over some of the details of what we trade first and what to expect from it. So I'm going to go over the basics here, okay, guys? Just follow along with me. First thing we're going to talk about is that there's two different types of contracts. There is regular mini futures, E-mini, regular E-mini. Now, with regular E-mini, you need a lot more. Margin to cover. So, for example, if you want to trade regular E-mini futures, that is /ES, /ES. I'm going to type it right here, /ES. It's the exact same number as MES. MES is just micro. What is the difference between mini futures and micro futures? Well, micro futures is 1/10 of one mini. Micro is smaller, broken down by 1/10. So with that being said, it costs somebody to trade micro E-mini futures, mini futures, E-mini futures in regards to margin. I'm going to go and bring it up, E-mini futures. And I'm going to show you as an example of one contract and how much that would cost. Now I'm just waiting for it to load, and we'll pick September, obviously. There is no ask here, the market is closed. Let me go ahead and expand this here as this is kind of running a little slow. Bear with me a second. Okay, so one contract, you could see the cost of it is $13,200. You need $13,200 in your account minimum to trade one E-mini future. Now, just a heads up, we don't trade E-mini futures. We trade micro E-mini futures, which is 1/10 of that. If you're doing the math at home, it's $1,320 per contract on micro. So anything mini futures, I want you to throw that out of your head because we're not trading those. We would be trading micro E-mini futures. Here is the symbol /MES. And then you go by the closest expiry. We'll go over expiries here in a second. So for example, let's say we wanted to buy one contract long of micro E-mini futures. You go and click here, you press one, limit order or market order, depending on you. I say limit, you click confirm and send. It's $1,320 in margin that you need in your account in order to trade this. Not $13,000, $1,320. So basically 10% of what it is, 1/10 of what it is currently going, or 10%, same thing. So this is a lot easier to manage. Obviously, if you wanted to trade one mini future, you could just buy 10 micro E-mini futures. Obviously, that would cost more in commission. There is commission in regards to this. So it would cost you a lot more to trade 10 micro E-mini futures versus one E-mini future. You see the cost is $22 to buy 10 micros versus ES by itself, which is the whole deal, the big one, 13,000. And you can see the difference here, be $3.25. So again, if you are trading big bucks in futures, that's up to you, whatever. Then obviously micro may not be for you. You would try to trade E-mini futures. Complete difference, obviously, just depends on you. We, meaning me and Anthony and our team, we trade micros. Are there times that we trade minis? Very rare, but we do sometimes. But again, for the most part, for this video, we're focusing on the micros. So micro E-mini futures are right here. And it's the exact same quote price, 3506.75 at the time of this recording. So we understand now when it comes to margin. Margin means you need to have this money in your account available to trade in your portfolio in order to buy this contract. So what does that mean? Does that mean you automatically lose 1320? No, it just means that that's exactly the margin requirement needed to make this trade. Let's say, for example, you bought micro E-mini futures one contract. Okay, cool. And you got out for 1 point. You got out, you said, hey, I'm gonna get out. I made my money, or I'm too scared, whatever it may be. So we're gonna go over the rates on how much you make in regards to it. So with micro E-mini futures, each contract size, technically speaking, is $5 per the 5 index. So we're gonna go over the multiplier. So in regards to the contract spec, meaning how much you make per tick on micro E-mini futures, $1.25 are per quarter of a point. So if you see here 3506.75, if it goes to 3507 and you bought it at 3506, you 3506.75, excuse me, and you made it went up 1/4 point while you're holding one contract of MES, you made $1.25. If you sold right then and there, well, you put a limit order or whatever reason, and you closed, you will get back your 1320, which you initially put in as your margin holding, just holding it, and you made $1.25. Now, will that cover even the commission? No, it wouldn't cover the commission. Commission is like $2, by the way. So they're not a huge deal. So there's a big difference there. So that's one tick, 1 point of MES, meaning 1 point. If it goes from 3506.75 to 3507.75, that's four ticks into 1 point. So we're gonna divide it by 4 ticks into 1 point. So you would make $5 per point. So if we went from 3506.75 to 3507.75, you have made $5 on your contract. You can close whenever you like. Just like that, you can go the opposite. 3505.75, you're down a point. you lost $5 per contract. If you only had one, then it would be relative to that. If you had two contracts, one tick down would be $10 loss, and so on and so forth. So again, this is really great because you can trade both ways. You can short the market as well as long the market. If you have traded Forex before, if you're a foreign exchange trader, if you've traded Forex before, then you know how to trade futures for the most part. If you traded Forex before, I'm gonna repeat that, you know how to trade futures for the most part. It's really, really basic, guys. It's basically looking at your charts, setting your stop loss, setting your take profit. That's basically it. And knowing your risk management. If 1 point, losing $5 per point on MES or EMS mini futures scares you, and that scares you in regards to your risk, then this is probably too much, and this may not be for you. But what's great is that you have so much more upside and downside. It depends if you're short. You have a lot of room to play. You can close 24 hours a day, 5 days a week. You don't have to wait 9:30 to 4 in regards to like options trading. It's a big difference. So just like and micro E-mini futures has that, micro NASDAQ futures has their own too. Every quarter point, which is /NQ, which is NASDAQ futures, is 50 cents, which is actually a little cheaper than S&P. The only thing is that their margin is higher, which is 17.60 per contract. So again, this is something that we'll post regarding the margins, or you could feel free to check a look at this website, Schwab Research Center Insights, what is micro E-mini futures, and you could always take a look at this. If you'd like, I'll go ahead and place the actual link down below in the comment section. So you have NASDAQ futures, their point spread in regards to their tick price, tick cost, is completely different from S&P. It's 50 cents versus $1.25. The most expensive one in regards to how much per tick would be the S&P futures, but the margin on a NASDAQ is higher. And then Dow margin, which is /MYM, is $1,100. So it's actually a little less than the S&P and a lot less than the NASDAQ one. And then you look at the Russell, which is actually a lot less than that. So a lot, but to keep in mind here, their tick points are a little more expensive. 1/10 is 50 cents. Big difference. So it's actually pretty close to the S&P more than the Dow is. So the Russell 2000 futures, their margin is 660 per contract. So it's a little cheaper. Just like anything else, if you trade at Forex, you understand that dollar yen, pound dollar, Canadian dollar, it does change in regards to margin, more of exotic pairs. So we don't trade anything else but index futures in this group. And we're going to focus on just these four. Makes life so much easier. So here are the contract specifications. Here's a couple of things to understand. The contract size for micro E-mini, again, is $5 times the S&P. We know that exactly. I just explained it. The trading hours. Now, these trading hours are something you want to write down. Again, I'll put this in the description below. Sunday through Friday. Sunday at 6 p.m. Eastern Standard Time is when futures open in the market. Not 5 p.m. That's incorrect. It's 6 p.m. 6 p.m. on Sunday. And then until 4 p.m. Eastern Standard Time, Sunday through Friday, the next day. There is a trading halt, just so you know, from 3:50. This is incorrect. That's actually Central. 4:15 Eastern Standard Time, every day, Monday through Friday, 4:15 until 4:30, futures halt. Not for anything bad. It's just a rollover to the next day. That's basically it. So Sunday at 6 p.m. Sunday at 6 p.m. I always talk about futures. Sunday at 6 p.m. all the way to Friday until 4:30 is when futures are open. So you have all those days. It's basically 6 days, 24 hours a day, 6 days a week. There's only one 15-minute period where it actually freezes in a sense. It is from 4:15 to 4:30. That's when futures stop. And then it reopens at right around 6 the next day. So there is a pause period on futures. Actually, at 5 p.m. it reopens up. So we know the dollar per tick, we know the product codes. Here are the contract months that you can buy. There's only goes by quarter. March, June, September, December. Your goal as a trader is to pick the closest to expiry to your current date. So today, being August 30th, we would trade September 2020 contracts, not September 2021, which you can actually see here. If I type in MES/MES, what will come up? See if I can get this going. /MES. You can see the different dates. You have September 2020, December 2020, but yet the prices are different. So you always want to pick the one that's closest to expiry. They have the highest volume. And then you move on to the next year as you get closer to the date. So we would focus, as of this writing, as of this recording, September 2020. And then once that expires, we do this December. Then once that expires, we go to March, and then so on and so forth. So there's only 4 contracts per year. So we're gonna focus on September 2020. Let me go ahead and reopen this window. Okay, delivery date. This is the expiration of the contract. And you want to make sure to close before then, and we'll remind you, obviously, 9:30 Eastern time on the 3rd Friday of the contract delivery month. So that would be, looking at my calendar for September 2020, it would be September 18th, right at 9:30 in the morning. So if you have a September contract for MES, you need to make sure to close it before September 18th, because then we roll over into December. That's the most important thing to realize in these points. Now, if you have any other questions, I will definitely keep this in the description box below the link so you can take a look and go over with you. So let's go over some futures trading FAQs with TD Ameritrade. So you could definitely trade options with TD Ameritrade just like we do. You could trade on Interactive Brokers if you're outside the US or inside the US. You could do it with Charles Schwab, E-Trade, Fidelity, whoever you want. You can. There's different futures products you could trade on TD and everyone else, but we're focusing on 4: S&P, Russell 2000, Dow Jones Index, and NASDAQ. That's it, nothing else. Trading hours for futures, 24 hours a day, 6 days a week. We talked about it. Each product has their own trading. You have to apply for futures approval, by the way. You may not get approved, so just a heads up. What are the requirements for futures trading on TD? I can only talk about TD because this is the one that I use. You need margin approval, by the way. You need tier 2 or 3 options approval. And you need an account minimum of $1,500 for margin accounts. You can also trade this on an IRA if you wanted to. I don't recommend it. But again, a minimum liquidation value of $25,000 to trade in an IRA futures. Only SEP accounts, Roth accounts, traditional or rollover IRAs are eligible for futures trading. That's it. So again, not all clients will qualify. Meeting all requirements does not guarantee approval. How can you tell if you have futures trading approval? Client services, my profile, general. Very simple. What type of trade, what kind of account types? Individual, joint, entity, corporation, partnership, LLC, IRAs. How do you view a futures product? You just type it like I just did. How do you read the symbol? This is a good one. /, this indicates it's a futures product. Anything that's a / is a futures product. The first 2 values, what does it mean? The symbol, we talked about it. ES is S&P. Mini, if you want micro, which is what we trade, you need to put an M in front of it. M is the most important letter that you need to worry about, is M. The next is the value, the expiration of the month of each contract. Again, we only have 4 for MES, Russell, Dow, and everything else. All these other letters are for other products, which is like orange juice, cattle, gold, silver, Bitcoin. You pick it, they got it. And the 4th value is the year of expiration. So you could see right over here, M for micro, ES, immediate futures, U for September. Right here, you can see it, U for September, and 2020, last 2 years of the date of the year. Where can I find the initial requirements for a future product? It will tell you on TD Ameritrade when you type up futures, the initial margin. You can literally trade futures on anything. We don't recommend that if you don't know what you're doing. We're sticking to 4. That's the only 4 we'll do signals for. Very simple. What is a futures contract? Futures contract is an agreement to buy or sell an instrument, such as E-mini or micro, or a physical commodity such as crude or for future delivery. That's all it is, just like options, all speculative. What is a tick size? A tick is a minimum price increment as a particular contract can fluctuate. We talked about tick is a quarter point. Quarter point is a tick. 1 point is 4 ticks. Remember that. How much does it cost to trade futures? For TD Ameritrade is $2.25 per contract. You can negotiate that depending on how much you trade. Can I day trade futures? This is a big one. Yes, you can. There is no pattern day trading rule for futures. Let me repeat that. There is no pattern day trade rule for trading futures. However, this is further liability. TD does not recommend, endorse, promote any day trading strategy. How are futures trading different from stock market trading? The stock market is a reflection of the current value of the company, while futures get their value from the underlying price of the commodity or index. Traders hope to profit from changes in the price of a stock, just like they hope to profit from changes in the price of the future. You're betting, in a sense, on the future value of the commodity, in this case, the index. That's it. And you have to be a TD Ameritrade client to be Thinkorswim? Yes, you do. So that's your basic rates. Now, we talked about the margin. I'll put the margin requirements here as well. Micro ES, 1320. To keep it open, you must have $1,200 in your account. Micro NQ, NASDAQ, 1760 to open it. In order to keep it open, you must have $1,600 in your account. If you break below that, they will close your transaction. So obviously, we do not recommend that you trade with anything less than, if I had to put a recommendation, at least $10,000. But if anything else, you better keep this maintenance margin open. If not, they'll close it for you. Micro Russell M2K, which is the Russell 2000, initial margin 638. To maintain it open, any trade 580. Micro YM, which is the Dow 1045, and maintenance margin 950. That's it. Everything else we don't touch, but this is it. So thank you for TradeStation for letting us have this. I'll put this on the link below. Now let's talk about the basics of futures trading. It's very simple, guys. If you've traded Forex before, if you know how to read a chart, it's very simple. Let's say we want to go ahead and get in a long position on MES at 309.25 break at the open. We go ahead and buy it, and then all we do as a signal service, just like before, we're going to let you know the entrance point, the exit point, which is either it could be total profit or the stop loss. You can obviously put a stop loss based on your trading strategy, whether it's the 50-day moving average here, the 100-day moving average here, or the 200-day moving average here, or the inflection point, the last drop, the last candle, what have you. It's up to you. But stop losses are easy to set up on E-mini futures, micro E-mini futures, excuse me. Take profit levels, your limit orders are very simple to use. Same thing. If you traded Forex, guys, you could trade futures. It's all charting. It's all setting up based on your take profit and your stop loss. Here is the big concern with micro mini futures and anything else. It's not as simple. So if you noticed, if you remember back in March and April, due to COVID, we had a lot of volatility in the market, right? If you remember very vividly, limit down and limit up days. There are times where you have limit up and limit down. What does that mean? We're gonna look at it together. Let's see S&P futures rules on limit up. From 8:30 to 2:25 Central Standard Time. So that'd be 9:30 to 3:25. There are successive price limits corresponding to 7%, 13%, 20% declines from the reference price. So keep that in mind. There's price limits. If the market falls, you get a circuit breaker or limit downs. It happens. It's happened before. Not many times, but it's happened. There is a price limit. If MES goes up 5% during non-US trading hours, or goes down 5%, which is 5 p.m. to 8:30 a.m. Eastern Standard Time, or that's Central Standard Time, excuse me, guess what? You're locked out. You cannot trade S&P futures. Not because you did anything wrong. It's just the volatility stops. It halts the trade. It halts it. It's a fact. It just halts it. That's not good as a trader because you're locked in and you know what's going to happen. So there's that risk involved. Now, there's also provisions during trading hours. There's a 7% decline, a 13% decline, and a 20% decline. Has the 20% decline ever happened? I have yet to see it. 13, yes. 7%, yes. So keep in mind, how many ticks is that based on what you have? If you don't know what you're doing and you get a limit down and you're long, you can get wiped out. You may have to owe money to the broker. Your stop loss may not be triggered. Your take profit may not be triggered. That's a risk you have to take. And keep in mind how much it costs to own this. Your margin, 1300, could be gone. You could be over the point of what your portfolio size is, and you may have to come out of pocket. Limit up and limit down can hurt both ways. The problem with limit down and limit up is that you can't get out until it resumes. When could that be? It could be minutes, it could be hours, depending if it's overnight. So understand that when you're going into the world of futures, it's for highly sophisticated and people who have time to do this. It's not for everybody. It is not for everybody. If you feel this is not for you, completely understandable. Take your time, stick to what you know. If this is something that you do want to do, feel free to join us on our futures trading chat. Very simple. We have a Discord chat and our Discord signal. We let you know what we're in. We let you know when we're out. We don't overtrade. A lot of it's swing trading, so you don't have to worry about it. But it is 24 hours a day, 5 days a week. But either way, we have a team to assist in every way we can in regards to futures. Just wanted to create this video as a way to break it down for you, the risks, the costs, and what to expect. Thank you so much, guys, for taking the time out of your day to watch this video. I look forward to seeing you in our futures chat and to profit together. Have a great one. Until the next time, we'll catch you later.